Well, good afternoon. We're back again with our market update. I'm Troy Walker, Director of Crop Nutrients here for MKC and Mid-West Fertilizer, joined by Devin Schierling, Director and Vice President of Sales, and Scott Barkley, Vice President of Energy. Lots of volatility and uncertainty, I would say, in all three of our worlds today. Devin, what's grain looking like from your chair?
Well, volatility is most definitely the key word, Troy, as we continue to see this market move in directions by, as the wind changes in Kansas, so does our grain markets right now. This morning, everything was trading lower, negative overall economic outputs. And then all of a sudden, we get a little bit of noise coming out of Russia, and we talk about how the Ukrainian-Russian grain deal might be falling apart. Followed by a little bit of news coming out of South America where Argentina is concerned about their weather forecast and limiting some exports. And next thing you know, we go from wheat being down 12 cents to being up 18, 19 here on the close today. So that volatility, really, when you put a bow on it, it just comes back to the U.S. is officially the residual supplier of grain in the world. And that was the place we had for a long time. And it feels like that's back to where we are once again.
Yeah, is that a good spot for us to be in?
Troy, that's an excellent question. It's one where, it provides us opportunity. So the security of the U.S. financial system, the ability to execute on trades allows us to have that advantage in a marketplace, but that advantage can also be a curse at the same time, which can allow you to have to hold grain for a long amount of time. But usually that comes with a carry in the market, which isn't bad for the elevator system.
Right. Scott?
Yeah, the last couple of weeks, we continue to use the term volatile. I think we've used it probably with every one of these recordings that we've done. I expect that we'll continue to use it as we go forward. But certainly the energy complex hasn't been any different from a sense of volatility. However, the headlines are a little bit different. The OPEC announced last week that they would be cutting crude production by 2 million barrels a day. This had some impact to the market and helped prices move up. I think it was more of a show than an actual impact to supply of crude oil. OPEC producing countries had not been meeting their stated production for several months now. So stating that they were going to cut by 2 million barrels was actually a net impact of about 500,000 barrels a day. And their intent is to keep prices high. Of course, they make more money as the cost of crude oil is higher. That is going to help provide a little bit of a floor to crude oil prices and by extension diesel prices. We've seen also after the hurricane, we thankfully did not have significant amount of refineries that shut down during that period. But we do have a significant fall maintenance season in the domestic production of gasoline and diesel. And that maintenance is leading to supply of diesel fuels being further pressured, diesel prices going up here over the last couple of weeks.
Yeah, and maintenance seems to be a common thing amongst most of our processing environment right now. Whether you're a bean processing plant, an ethanol plant, when the commodity or your base stock gets extremely expensive, it's a great time to do a little bit of preventive maintenance and take a little time. And we're seeing that with, like what Scott mentioned, with that overall decrease in ethanol profitability. And that's a little bit of what the bears are hanging on to right now, is how is that going to impact our overall demand as we go forward?
Yeah, and I mean, that carries over to fertilizer as well. We've seen some maintenance done now, and that in the case of fertilizer, a lot of that maintenance that we've seen over the last several months was done because they didn't do anything last year, because a lot of them had more or less unplanned shutdowns during COVID, and then when they fired back up, they just skipped a whole round of maintenance on most of those fertilizer plants. So we have seen some of that. I mean, to that, somewhat similar to all of your points, one of the things that's driving fertilizer right now, and I would say giving it a little bit of turmoil, is the balance between weather and what's going on in Europe. There's news out of Poland today that one of the fertilizer plants in Poland may restart here, which means there would be more product in the global market. but that's balanced against the new, the situation we have with the river, where the river's down, decreasing the volume or the amount of fertilizer that we can put on barges, and causing a few logistics challenges that are having an impact on pricing as well.
That's an interesting point, Troy, because you touched on it there just a little bit, but the one exception I think over the last couple of weeks here has been natural gas. Natural gas in Europe and natural gas domestically. Do you have any thoughts about the natural gas prices and how those have declined here a little bit?
Yeah, certainly. I mean, we've been watching the European natural gas. I think I've said almost every time we've done this market update that one of the key drivers to the domestic fertilizer price has been the natural gas price in Europe. And that's because the high natural gas prices shut down those fertilizer plants. Well, over the last couple of weeks, those natural gas prices in Europe have bounced somewhere between $40 and $60 per MMBTU. They think at about $40 to $50 that those plants are able to operate. The question for those plants is that $40 or $50 MMBTU here to stay, or is that just today and a month from now, once they got back up and running, we're going to be back up to $60, $70, $80. So with that, the fact that the weather seems to have been a little more favorable perhaps in Europe. I mean, my understanding is it's still relatively warm over there, so they haven't had to start dipping into that natural gas for home heating yet.
I just pulled up the domestic natural gas chart, Troy, and we saw a high of around $9.20 per MMBTU mid-September, and now trading front month at just under $6.50 MMBTU. That would be something that hopefully in the future will help level out the fertilizer markets. Now, to be clear with the numbers that you were just talking about, it is still incentive. There is still incentive to move natural gas from the United States to Europe. Certainly, the arb or the difference in price is large enough that producers of natural gas in the United States are incentivized to move that to that European market, even though it has come off a bit.
Natural gas and fertilizer are moving to Europe, Scott. I mean, the export numbers from both August and I'm sure September will be here shortly. Those export numbers are staggering, the largest we've ever seen as far as fertilizer being exported out of this country into Europe. And to your point, the cost of production in Europe today for anhydrous is equal to the retail cost here. So after we've got all of our bases added to the cost of fertilizer here, there's a lot of profitability for these organizations to ship that across to Europe. So as long as they're answering to shareholders, we think there should be loyalty to the American farmer. I understand that. I agree with that. But they're shareholders. These are publicly traded organizations. If they can make significantly more money shipping it, they're going to ship it. Sure. That's just the nature of supply and demand, I guess, where we're at today.
So, hey, Troy, as we wrap this thing up here this afternoon, let's kind of hit home on what we're seeing locally, and let's bring it back to the wheat harvest. So the old motto that Grandpa would say was "dust it in and bust the bin," and I think that's going in throughout a lot of our area. We're seeing wheat seeding probably somewhere in that 65 to 75% complete throughout the territory. Probably almost done by this weekend on what one to be planted early that's not following another crop. Conditions are dry, but at the same token, we're not seeing a lot of people back off from that. And from a profitability standpoint, the nice little run up in futures on the wheat market has also provided some cash opportunities to where people with a strong APH have an opportunity to help do that, and that's carrying over to corn as well.
Yeah, and to your point on wheat, I would certainly agree. It feels like wheat planting, and particularly through central Kansas here, has really taken place over the last couple of weeks, and I can tell that by how much dry fertilizer, starter fertilizer, kind of that we've shipped in. And my feeling is, and I don't have the solid numbers on this, but maybe one of you guys have seen the numbers, it feels like we're planting more because I just feel like we've brought in a lot of more product than what we would have. So there's either more optimism and we're fertilizing where we haven't in the past, or we're actually putting in some additional acres of wheat.
And feel is always different depending upon where you're at.
It is.
But I would say it does seem that we're going to have more. But our corn harvest was so early. that corn and a lot of milo and even a lot of full season beans have been harvested, and we're still before our late planting data from a crop insurance standpoint. So although it feels like we have to get this done right away, if Mother Nature allows and we see some moisture fall to give us a good base, we still have time to see that extra push. So in my opinion, in order to get a big increase in wheat acres, we're going to have to see a little bit of moisture to encourage those double crop, those riskier acres to go back into wheat from a cash flow standpoint.
Yeah, absolutely. That makes sense. The other thing we've seen with wheat, the conditions just did not allow for nitrogen to go on ahead of time. Some growers do, some growers don't, but most it would seem this go around they're deferring that nitrogen application until top dress, which is totally doable with wheat and very understandable. So it'll be interesting to watch it. If we get a little moisture, we could have a good nitrogen top dress run here through the winter.
And from a diesel perspective, even though the market has moved up here over the last couple of weeks, we are still seeing a greater than 30-cent backwardation between what we are selling contracts for the remainder of 2022 to what we're able to get contracts out for 2023, including that wheat harvest. So that advantage to lock in a price in the future that's lower today is not something that we see all the time, and it's certainly out there for our producers.
That's great. I mean, if they can do that, like we talk about almost every time, if you see that opportunity to lock in some profitability, whether that be on the fuel side or the fertilizer side, in conjunction with your grain sales, then absolutely do that. Take some risk off of the table, put some profitability in your pocket. The team here at Mid-Kansas Cooperative or MKC, Mid-West Fertilizer, are absolutely committed to helping you do that and make that happen. All right, we appreciate everybody tuning in, and we'll look forward to chatting with you next time.